Wall Street tax cuts are underway, and there is a lot to this. Let's break it down for you guys. You've probably heard me mention Uphold before, and there's a reason I keep talking about them. Uphold makes it incredibly easy to bridge the gap between your portfolio and the real world. This has not been done before. Their Uphold debit card is the best example of that. It lets you spend your crypto or your cash anywhere Visa is accepted, all while earning 4% back in XRP on every purchase. It's the easiest way to stack rewards on your daily spending. Download the Uphold app for more and get started. And let's just get started with this one right here, which of course is the CPI. This is landed exactly as expected. Headline right now is 3.4 year over year versus 3.4 estimated. What does that mean for Fed rate cuts? Don't know just yet, even though it seems a little softer. If you look at some of the guys out there that are topping on this is, of course, Tom Crown. He's hitting on it right here, CPI. No change, cooling narrative might be beginning right now. So get ready. If you guys think we're going to get a Fed pause, which is what it looks like, let me know in the comments down below. Or do you think we're going to get a cut? Just put cut or if a hike. What do you guys think? Right now, it's going all over the place. Because remember, just a couple of weeks ago, we were in for a Fed rate hike. You guys remember that? Yeah, I remember that. And here we are now at a pause, possibly even something different. Market expectations right now for the September rate hike fell to 34%. This, of course, coming in after the CPI. This marks the lowest chance of a September rate hike since July 17th. And this goes back to the pre-day of what Warsh was being pretty much crucified for, of even talking about rate hikes. And here he is right now. The decision continues to climb here on a pause, no change right there, spiking to 67% right now as we report today. So this continues on, and it doesn't look like it's slowing either, because this is the December 9th, also dropping in terms of a Fed rate hike. Does not look like we would even get a Fed rate hike all year long. So the real question is what does the economy do or deliver to the chair of the Fed to say maybe a rate cut is in order? Don't know. Lot is pointing at, I think, the market right now, and I think in general, where the macro will play out into this. And a lot of that is still coming from the Middle East. So be watching that. But I also think you're going to be looking at the S&P 500 playing into this as well. The other thing that could play into this is what's going on right here. And that is Trump's capital gains tax discussion is now including capital gains for inflation before taxes are calculated. So think about this for a second. For example, if you purchase a stock for 100K, and sold it 5 years later at 200K. So they're claiming that you would, under this new system, that you would only pay tax on basically $80,000. So instead of the $100,000 gain, you would get that $20,000 inflation spike. So $80,000 would be your real gain. This would be a pretty big deal. And if it does happen, it could be significant. The problem, I'll get to that in a second, but I want to play a clip for you where Hassett is trying to explain a little bit more about what's going to happen before midterms. Take a look.
He says, as we're going into the midterms, that he doesn't want to just sort of say how great it is what we've done in the past. He wants to hit people with the things that are promises that we're going to do if the Republicans have power in the future. And so you can expect a lot more policy between now and the midterm, as we've been talking to the president. I'm sure that's why he was talking to you, Larry.
Yes.
Your great ideas about capital gain.
I spoke
he understands
to him.
that you don't run in the rearview mirror,
that
right? You run on
yes.
what you're going to do.
Now
and,
you're
and
cooking.
That's 100% what
now
he's
you're cooking. That's the Kevin Hassett that I know and love.
All right, so this guy can spin for sure. Hassett is a great spinner of fodder out there. Because talking about what you're going to do, I think we already saw that in the last election, talking about what you were going to do, but ended up doing something else. Well, here's Hassett talking about what could be coming in for home sales taxes and how this plays into capital gains. Take a look.
These are not necessarily rich people. These are empty nesters who own a house for 30 or 40, but they shouldn't have to pay the Biden inflation tax, Kevin.
You're right. Like 20% of the capital gain is Biden's inflation tax because, they basically helicopter dropped money into the U.S. even though the COVID crisis was over. And so there's making up to do with that kind of problem. I'm sure that it's something that the president would agree
forever
with as we're moving forward.
He's
literally for you, literally forever.
Literally forever.
All right. So, okay, first of all, I'm interested in this idea of giving a tax cut based on inflation. That seems like a narrative that could be done. Somebody, I don't know who came up with this. This was Hassett or maybe Besant, but his officials are floating this to cut capital gains tax on home sales. So this means a big deal. Now, the problem with all of this, guys, is they can talk about it all they want, but Congress has got to be able to push this through. And based on this, which has been the legislative issue that we're facing in D.C. right now, which they're getting nothing passed, really. So how would this even be possible of going through? So could it just be, campaign juice to try to get, the Republicans into hopefully the Senate? Because right now that's the point that is on, maybe it's deathbed right here at 53% of a chance right now that Democrats could take the Senate. And these 3 seats right here pretty much demolish the Republicans' chance. And remember, right now, it's an 88% chance that the Democrats take the House. So this could end up being, and this might be why we are seeing so much activity out of Trump's administration to try to defend against this, because it could be one of those things where we do get a completely split administration and Congress. Balchunas came out with this. Interesting, the SEC poised to roll out a pair of major initiatives in the coming days that could further turbocharge the U.S. crypto industry. And this is in reference to the digital asset bill. And what they're talking about is major initiatives that could be launched just in the next few days. If they actually do it, what does that tell you? Does this tell you that the SEC and the CFTC are kind of in a position now where they think they're going to have to initiate a lot of this rulemaking? And it appears that that may actually happen. I was concerned that the SEC would probably wait, but this tells me some other things if they're going ahead and proceeding right now. So watch very closely. Other things that you got to watch out for is what's happening with the CFTC. They have now invoked an emergency authority to keep Kalshi operating in New York. And this, of course, comes after New York Attorney General sought to halt all of their contracts nationwide. And, of course, this is a big deal. Now they're also demanding more than $36 billion in damages. So this is a big move here that I think we'll continue to see more. I don't even call this lawfare, but I think we are getting into regulatory, bureaucratic lawfare that is going to play into crypto in the coming months. Now, another thing that you have to watch in the markets is what are the big dogs doing? Well, you've got Berkshire Hathaway now turning bullish again, who bought $19.8 billion in stocks just in Q2 and ended 14 quarters of net sales of stocks. So you look at that, guys. Do you think that maybe Warren has come off the sidelines for a reason? Is he looking at something in the tech side? Is he looking something purely as the alphabet play, or could this start to filter into other areas of the stock market? Pay close attention to that guy. You got Michael Burry going the other way. Michael Burry is saying Buffett has lost his edge. Greg Abel is a buffoon and says the company is deploying cash way too aggressively, and this is going to hurt. Now, you got to remember, Burry has not necessarily always been right. He's been wrong on some times as well. So maybe this is a little bit of theater out there. We'll see how it plays out. I want to go over to a clip real quick, because this is talking about Bitcoin and strategy and what their plans are for the rest of the year. Take a look.
We now have 840,000 Bitcoin. Since the beginning of the year, we've bought 175,000 Bitcoin and we've sold 7,000, so about 25x more. And in the last 3 months, we've gone from being the number 2 institutional holder of Bitcoin in the world to the number 1. Right? So I think we've bought a lot throughout the course of the year. We've increased our holdings 25%. I've said we're now the JP Morgan of the digital economy. And we'll get back to buying more Bitcoin throughout the course of the year. What we've been doing over the course of the last few months is adding to our US dollar reserve. Right? So we've added 175,000 Bitcoin this year, sold 7,000, and we've actually increased our US dollar reserve to $4.75 billion from about $800 million. So that's been our focus over the last few weeks, and then we'll get back to buying Bitcoin at some point in time. And it's not price related, it's about whether we can do it accretively to our common shareholders.
All right, so one point is, in that interview, they were talking distressed asset. I don't necessarily think that is the case right now, if you really look at the numbers behind this. But what you do not see is the narrative, and I think that is the more important play here on strategy. And this gets into other things, because remember, Bitcoin right now, especially if you bet on what's going to happen with a lot of our politicians, and maybe crypto in general, this starts to get into something to watch very closely. Take a look.
What is going to make Bitcoin go up 30% every year for 30 years?
Well, let's start with first, what do people think the stock market's going to do? Historically, people would say it's 7, 8, 9. Well, hold on. Think about it for a second.
What's going to make people buy this endlessly? Up 30% for 30 years?
The only thing that matters in finance is that the people in Washington, D.C., they are absolutely ridiculous. They will not stop printing money. If they keep printing money, Bitcoin is going to keep going up over the long run. So will gold, so will real estate, so will stocks. If they print money, asset prices will go to the moon, and Bitcoin happens to be the single most sensitive asset in the world to global liquidity. And so all you're betting on is the stupidity of the politicians to keep printing money. And I don't know about you, but that is a bet I will take all day long, is they are never, ever, ever going to stop printing money.
I don't know of any investment which is even likely or possibly going to go up 30% every year for 30 years. I don't know anything.
All right, well, and the challenge I think that right now the Bitcoin community is facing is what we have in terms of a narrative coming in from Saylor and their moves, which could get corrected, sure. I do agree with Pomp in the sense that, you know, DC is going to continue to be silly. We are going to continue to see printing. But the question is are other assets going to take the limelight? If you look at this right here, ETH right now is maybe becoming a little bit more of the favorite child coming in from Wall Street. And I think this is the thing that you have to consider. Where does TradFi go? If we do get windows of regulation, if you get windows of adoption, especially as we start to see tokenized securities, where does TradFi go? If it does go the ETH route, that becomes a different narrative for Bitcoin overall. And this is a good point right here. You've got Fidelity now, $7 trillion asset manager, which is going to enable staking. This is the first time that people will be able to get yields on Ethereum in an ETF right there on a traditional regulated holder out there, and that of course being Fidelity. So granted, sure, you can't move it out. I get that, guys. You'll argue with me there. But the point is, it's a major shift in how investors are going to look at these assets. When you start earning revenue on these assets, it changes the mindset. And that, to me, is a big part of where this narrative may go. So stay tuned. I think we're going to have a lot more happening this week. So hopefully you guys will be here. We'll see you then. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.